Good afternoon, everyone. Welcome to this week's market commentary. It's Alistair here. It's Sunday afternoon, just getting ready for the week ahead. And as promised, I'm getting you the second market commentary. So where are we? What's changed since I last spoke to you? So we'll go straight to the S&P and the Dow, and I'll just click between the two because you can see here on the Dow and here on the S&P, we've had that retrace. We've had another couple of positive weeks in the US markets on the futures. You can see that there, and the Dow has got a weekly close above the 50. Now that doesn't make me extremely bullish. I would be looking now, if we continue to move up, I would potentially look either swing based or intraday based for long trades because of where we are if we continued and created another new high. But at the moment, hovering around the 50 on the Dow and hovering just under the 50 on the S&P. Again, I'm still in that neutral zone, as I talked about on the video a couple of weeks ago. If we push on here, and especially if the S&P gets above this level, then I'll be more inclined to see if price can get up towards the prior highs, and if trade opportunities on our lower level timeframes come along, I would be looking more for upside opportunities here. If we react to these levels over the next week or so and start to move down, doesn't mean I'll automatically short, but I would be more inclined for short opportunities. Less so because of the traffic that you can see here on the down. If I go back to the S&P, the highs and lows that you can, sorry, not the highs and lows, the lows that you can see in here. But the highs and lows, what I'm meaning by that is it's still a little bit choppy. This is the choppy zone. So neither of these are giving me too much reason to trade in either direction. The DAX, however, the DAX on the weekly, so the main German index, a lot of our guys day trade this. I will swing trade the DAX if setups come along. What's interesting here is we're back inside this monthly trend line. So I'm going to go to the monthly trend and just show you this. So we're back inside it. We haven't had a monthly close yet because obviously the monthly candle doesn't close for another week, but we're back inside it, hovering around our monthly 50. So it could be very simply that we had trades come in, people started shorting the market on a break of this trend line. But as you can see, price has done almost a classic move here, and what it's actually done is it's come back. So it's immediately broken the trend line and come back. So for me, I'll be watching to see if these lows can get broken, and then I would be looking clearly for short trades, not necessarily on the monthly time frame, but on the daily, possibly the 4-hour, clear short trades down towards this next level. So there's a nice gap between where we are here and where we are there. So a nice element of clean air on the DAX. Now, short term here, gold, just switch to gold here on the weekly chart. Gold is pushing up here, as you can see on the weekly chart, at a weekly candle close. Been very indecisive the last few weeks, but over the last month or so has had a little bit of an upward move. And if the Dow and S&P has also had that little bit of an up, usually they're going, can often be going in different directions, gold going up, the indices going down and vice versa, but we're seeing a little bit of a positive move on both. And then we'll come to the pound. So we come to cable pound against the US dollar. Another a positive week, indecisive week the previous week, positive week last week. We've got the vote on Tuesday. So the vote on the amended options that Theresa May is putting in. So there could be some volatility come Tuesday. We do have a couple of potential trades with our specific strategies, and a few of these are coming in on pound pairs. We've got some levels in and around this area here that we would be looking at certain trades. And obviously the question that came up in the room session that I was doing and the analysis session I was doing this today being Sunday, was, well, what do we do? Would we still take these trades? And the answer is, if you're managing your risk correctly and the trade set up, the answer is yes. But if you've got too many, we've actually got quite a few potential trades on what we call pound cross pairs. And what that means is, if I've got too many trades, then I would be on currencies that are the same. I'd be looking to factor that into my risk profile. So we've got a couple of trades on pound, Swiss franc, pound, US and euro pound, and we obviously factor in and use a very specific risk management process to do that, regardless of Brexit. But with the Brexit potential vote, or the vote on Tuesday, and that potentially creating some volatility and us having potential trades at that time, we do need to factor that in from a risk point of view. So at the moment we are fairly busy across potential trades. I'm running 2 trades currently at the moment. These are some of the potential trades that we have across various different markets. So there's quite a bit of monitoring for our swing traders to do this week. So before we finish, just wanted to talk to you a little bit about a particular concept that we're very big on here at Trader Support Club, which is testing. On our private members forum, myself and my team, we post up insights, things that have been happening. Martin here was talking a little bit about strategies and consistency. So 3 words that come up a lot with our successful traders is consistency, but consistency not in terms of just their trading, but how they apply their trading, how they review their trading, but also what they test. You can see here Martin's talking about specific setups, but something that Kerry's highlighted, she's talked about one of our traders, Jack, here, going through some of the testing that he's done, and Sally spent Monday night helping Alicia with her testing. The key thing is they don't just simply learn a strategy and blindly trade that strategy regardless. What we encourage them to do is not necessarily do hours and hours of testing, because we've done a lot of that testing and hard work up front, but we get them to test the strategy so it builds their confidence, it builds their understanding, it builds their pattern recognition, and they start to build up data. And that can be back testing, that can be a combination of back testing and demo trading. And what that means is when they come to actually trade the strategy, what it means is that when they trade the strategy, they trade it correctly. So regardless of the initial result, they have the confidence in how they're applying it, which means over the long term, which is where trading strategies are most effective, not the short term, but the long term, they're able to maintain a consistent approach to do it. So key thing, if you're listening to this and you are not testing the strategies you trade, you're blindly trading without testing them, or even worse, you're not even trading strategies, you're just trading with pure discretion, you need to get in touch with us and you need to learn to do this properly. Otherwise you're going to be wasting your time, and with the team that I've got and the feedback and the processes we have, it can make a huge difference. So good. So I won't see you on a market commentary now until, when will it be? It will be February, a couple of weekends time, and I'll be back, and it'll be really interesting to see where those indices are, if they've moved a little bit, and whether or not we're closer to some levels on those. Obviously, we're going to be trading, swing trading live, and some of the team are going to be day trading. So we'll have updates on our main Facebook page, our private Facebook page, and I will be getting some emails out to you over the week as well. So if you are trading, safe trading, keep a track of the main indices. Bear in mind, Tuesday we've got the vote if you are trading pound pairs or really any of the major currency pairs. Safe trading, and I'll catch up with you again soon.